Well, Money Talk News is reporting that Americans fear going broke in retirement, not having enough funds to live on more than death itself, saying new research shows that most Americans fear outliving their retirement savings more than dying, and with many falling short of a target of $1.26 million, experts say, is needed for financial security. So folks are beginning to waking up and smelling the coffee, knowing that they are in a world of hurt when it comes to retirement. Most of us worry about our financial future, they say, but striking new study shows how deep that anxiety runs. Nearly 2/3 of Americans are afraid, that's 2/3, can you believe it, are more afraid of running out of money in retirement than they are in meeting their maker. And this comes from a recent study from Allianz Life, the insurance giant. And the fear cuts across many generations. I'm Generation X, and they express the highest level anxiety. That's 70% of them are worried about an empty bank account. One of the driving forces behind this increased anxiety about retirement is inflation. And even though the rate of inflation has slowed significantly, the annual rate of inflation, from its high of 9.2% in June of 2022, today prices are still about 20 to 30% above their pre-pandemic level. That includes groceries, that includes auto insurance for certain, homeowners insurance, property taxes for many in those states that don't have a cap on how much property taxes can be adjusted each year. So let's look at the savings gap. It's estimated by financial experts that you need about $1.25 million to retire comfortably here, but the reality falls very short. It says the median retirement account savings sits at just $87,000, that according to Federal Reserve data. And it's this gap between expectations and reality that's really stoking these fears of outliving money in retirement. No one wants to retire destitute. Yet nationwide, they say Americans have $30 trillion in untapped home equity, but they cannot access it without taking on more debt. There's a little plug there for HomeTap. That's the home equity investment, but it's really an equity sharing contract. We've covered those earlier here in HECMWorld if you want to check that out. But the other option they mention is taking advantage of a reverse mortgage. And so it's good to see that they're looking to home equity. They note that if you're already struggling with payments in retirement or think you will, then accessing your equity with a reverse mortgage could be an option. And so it's good to see that they recognize the reality that many soon-to-be retirees and those that are already retired have few sizable assets besides their home. And so that's just a financial reality. So this is, again, kind of a little depressing to hear that pre-retirees, Gen X, my generation, and those in retirement are so stressed out about their retirement preparedness that they fear that more than dying. Last week, as many of you know, was NRMLA's Western meeting held in Irvine, California. And during the NRMLA meeting, there was an update on what's really been going on behind the scenes when it comes to lobbying and advocacy for the reverse mortgage industry. So let's dive into this a little bit and see what Housing Wire has to say. So first it was Mike Kent and Jim Corey who are working in managing the efforts to really reach out to members of Congress, lawmakers. And so NRMLA Steve Irwin opened the proceedings and described it's a tough environment for the industry right now today, mostly due to interest rates. But then there's economic uncertainty that really is maybe having some older homeowners kind of like hitting the pause button before they get a reverse mortgage. Mike Kent, who is a senior vice president of corporate development and industry relations for Liberty Mortgage, said that the importance of the advocacy work is very important, not only to keep our industry functional, but moving forward at the same time. And he explained that there was a transition last year. If you did not hear, we had Peter Bell, the former president and founder of NRMLA, step down. And then also NRMLA separated itself from the lobbying organization Doorbell Inc. But that doesn't mean that NRMLA has stopped their lobbying or advocacy efforts. In fact, they have met with lawmakers on the Hill to communicate the reverse mortgage's importance in helping retirees retire comfortably. And those meetings include those with Representative French Hill, a Republican from Arkansas, the chairman of the House Financial Services Committee, which is really good news. Then we have Representative Zach Noon, a Republican from Iowa, who is also on the House Financial Services Committee. And NRMLA did meet with Representative Josh Gottheimer, a Democrat from New Jersey, and Representative Mike Flood, a Republican from Nebraska. And they actually both collaborated across the aisle on anti-fraud legislation for older Americans. And they met with Senator Mike Crapo, a Republican from Idaho, who is seen as a lawmaker who actually understands the dynamics of the reverse mortgage program. So this is all good news. We're going to be seeing more engagement in the future, but this is really key for our industry. Now, one of the agencies that NRMLA is very active in working with and collaborating with, of course, is HUD, the U.S. Department of Housing and Urban Development, and they've been working with the Deputy Assistant Secretary for Single Family Housing. That is Matt Jones. Kent said that Jones is a strong supporter, and it was discussed how work that helped the program under the prior administration could be continued, especially on the front of liquidity, which brings us to Ginnie Mae, right? We've been waiting for the enactment for HMBS 2.0 to go live now that the term sheet's been issued and everything's been finalized, but we're kind of in a holding pattern right now because Joe Gromley is acting as the company's executive vice president and COO. And he's a supporter of the program, and they feel that NRMLA does, that there's some work that they can do with Ginnie Mae to improve liquidity. Again, that's going to be really a reference to HMBS 2.0. But we're still waiting for the appointment of an FHA commissioner, and that is important as well, so things can move forward more efficiently. So it's good to hear that after this transition that NRMLA has still been active behind the scenes when it comes to advocating with lawmakers and policymakers on the federally insured reverse mortgage program. So just an update for you if you're wondering, is our industry trade association actually speaking with lawmakers? And the answer is yes, they are. We know that the housing market is struggling today, but really how much depends on which market you're speaking of course. And MarketWatch notes that the pace of home sales in March was the slowest that we've seen since March of 2009. Can you believe that? That was during the depths of the housing crash and great financial crisis. And they list one example. So this gives you an idea that the housing market has definitely shifted. And one example is Chet Galloway from the Bay Area. He had his home on the market for 8 months. Now, his father built that home in San Carlos, California in the 70s, and he lived there until he found a new home just about 2 hours away in Sacramento. And he said that he had renters in the property in the Bay Area which was listed for about $3 million as of recently. Now, he really wasn't in a hurry to sell because the home was paid off, but he didn't expect it to take so long. He said, I personally expected it to sell very quickly, and he has joint ownership of that property in the Bay Area with his father, as he told MarketWatch. But he faced a very similar situation that a lot of home sellers do today. They had to reduce their price. And he noted that he reduced the price from $3.5 million to $3 million. So that's a $500,000 haircut. But he was still getting what he said were lowball offers. And with the uncertainty around the economic policies of the Trump administration, he's probably referring to the tariffs. He said, I think people are just less willing to plunk down millions of dollars for a property. I would agree. And then there's another example, a gentleman that is in the Phoenix area. So he was looking to buy a home closer to the city of Phoenix, and he made an offer and closed on the property pretty quickly within 3 weeks. But he had to sell his existing home. So it's on the market. It's in Prescott Valley. That's about 90 miles outside of Phoenix. And he said that this has been a very expensive and arduous slog. We were hoping we made the right decision in buying the Phoenix house, he told MarketWatch, but right now they have 2 mortgages and 2 utility bills, 2 homeowners association fees, and he says financially they're just really bleeding. And so this reflects the real slow pace of what is typically a busy season in home buying. And so a lot of areas are seeing homes on the market as long as 70 days or longer. MarketWatch notes that existing home sales fell broadly by 5.9% in March from February, so that's a big drop as well. And the annualized pace of sales is the slowest since September of 2024, and the decline was the biggest one-month drop since November 2022. So things are cooling off significantly. I was hoping we would begin to see some meaningful recovery in sales this year so far. That's not happening, said Lawrence Yun, chief economist of the National Association of Realtors, in a press call. And home sales in March were down as well. So these 2 stories show that home sellers are really struggling to get their homes bought. And consequently, many are dropping their price. They're doing price cuts. So what you want to watch for in your area are price cut reductions. You also want to look for any spikes in home inventory in the markets in which you're originating reverse mortgages, just so you're kept abreast of what's going on and maybe some of the challenges you might encounter in a given market.